A Trump victory would be a big surprise, and I think you would see stock sell-off. Risk assets in general would sell off as well. Bryson, Wells Fargo Securities. The biggest event this week looking forward will of course be the US election. Numerous scandals on both sides have made the race incredibly tight, which has traders flocking to safe haven currencies, commodities and stocks. How do you see the markets performing during the course of this week?
Well, I think it really depends on obviously what happens, with the election. I mean, we're kind of seeing a mini preview of that today with this news yesterday that the FBI is not going to, move ahead any further with Hillary Clinton. So, stocks across Europe are up. The futures here in the United States are pointing to a big positive, opening here. Commodities have rallied. It's kind of a risk on, sort of trade, and so we'll see how things go. But if you assume that Hillary Clinton, wins on Tuesday night here, I think that trade probably continues the rest of the week. However, obviously at this point, a Trump victory would be a big surprise, and I think you would see stocks sell off on that. Risk assets in general would sell off as well. And the other thing to keep in mind is if the election outcome is not seen as quote clean, if it's say Hillary Clinton wins, but Mr. Trump and his supporters dispute that and don't concede and say that the election was rigged. If anything that it looks like is going to be, say, more political gridlock here in the United States going forward, that probably wouldn't be too positive either. So, I mean, we'll just have to see how things, pan out on Tuesday night, Wednesday morning here in the United States.
Super Thursday rocked the market, with the High Court ruling Theresa May's government cannot activate Article 50 on their own, and the Bank of England held rates steady. Looking forward, Jay, we have the UK balance of trade out on Wednesday. Do you think it will continue with the positive news trend, and how do you see the pound performing?
Just looking forward, I would expect that the trade deficit in the UK would slowly start to come down. These things don't turn around, just overnight. But the pound in general still remains depressed from where it was back in June. That should, going forward, help UK export growth. However, on the other hand, we do believe that domestic demand in the UK will slow over time with a lot of uncertainty about investment going forward. We think that causes the economy to continue to slow, and that tends to depress import growth, as well as the weaker currency as well depresses import growth. So in general, we'd look for the trade deficit to narrow somewhat going forward. We do believe that the pound will probably, in a longer term sense, will continue to depreciate. The Bank of England will probably not be raising rates anytime soon. Arguably, they could actually cut further if the economy weakens, and we expect that the Federal Reserve will be hiking rates going forward. So in general, we would think that the pound would it could be a short term sort of rally here, but I think that the trend in the pound is probably still lower.
And lastly, we have China's inflation rate out on Wednesday. Recently, China is looking like it is on the mend, and the market expects inflation to rise for October. However, with fear mounting on the housing bubble in China, what is your take on China's economy, and do you think inflation figures will deliver?
So, in general, yes. I mean, there does appear to be some stabilization in growth in China in the last few quarters. We do believe, though, it will probably continue to trend lower in terms of the growth rate. Certainly not looking for the Chinese economy to collapse. But it does look like they're starting to tighten policies again in response to the big run-up in housing prices. And, the state-owned enterprises there still remain, pretty inefficient. And we think you'll continue to see capital spending there slowing going forward. So we're looking for slower growth there. In the near term, in terms of inflation, you'll probably see higher inflation rates just because you don't have the big negatives of lower energy prices, lower food prices pushing the inflation rates down. So it could trend a little bit higher, in the next few months. But in general, if the economy continues to weaken on trend, we would expect the inflation rates in China in general to remain pretty low.
Thank you for joining us, Jay. That's all for today's Week Ahead. But for everything else impacting the FX markets, stay with us here on Dukascopy TV.